Ladies and gentlemen, Greg McCloskey from ForexLive.com. Today's date is December 4th, 2023. This is the Kickstart video where I take a look at three of the major currency pairs to start your trading day, to start your trading week. So let's get started. Looking at the Euro versus US dollar, we are on a 1, 2, 3, 4 day decline here, but the low price that we saw on Friday did reach lower than the low price today. That low price reached down to extend toward the 200-day moving average. That's a green line in this chart at 1.08196. As you can see, the price fell just short of that level and started to rotate back to the upside. We did close back above the 50% retracement of the move down from this high for the year to this low for the year, which was in July and in October. The 50% comes in at 1.08618, and as you can see, we just moved back below that level, currently trading at 1.0859, so below the 50% midpoint. That might be a barometer in trading here today. More bullish above, more bearish below. We'll see how that all pans out and see if there's a momentum around that level, 1.08618. As you can see in trading here today, off the hourly chart, the price has been above and below that 1.08618 level, which is right around here. But that has not really been of a significance here in trading today. The market's been fairly comfortable trading both above and below that level, so be aware of that. What we do know or we can see off this chart is that the high prices for the day, absent the first couple hours of trading, have stalled within this within or against this swing area. The swing area goes back to different swing highs and lows, I guess, going back in time through this period, through here and here and here and here. And it was in trading last week that the price came down to that level here and here on about Thursday and Friday, broke through the level on its way down toward the 200-day moving average. Also, by the way, the market tested the 38.2% retracement of the move up from this November low to the November high, actually, and that level held support as well. So not only do we have the 200-day moving average with 38.2% holding support, so keep this area in mind on the downside as being a key level. But this swing area up here between 1.0878 and 1.0887 is going to be key. So if you want to look at that 61.8 level right here as a level that maybe give some clues, although it hasn't really worked. What we can say technically off of the hourly chart is that this area up here between the 1.0878 and 87 is going to be our key level to get to and through on the top side, to give the buyers more confidence that the maybe the corrective move off of the 200-day moving average, off the 38.2% retracement, is the right move. In which case, we'd start to look toward the 100 and 200-hour moving averages up here, the green and blue lines up here near the 109.25 to 30-ish type area for the euro versus US dollar as the next key target. All right, if we do stay below this level, however, then the bias remains more to the downside with this 200-day moving average and 38.2% retracement as the target to get to and through on the downside. Now let's take a look at the dollar versus yen next. And if we look at the daily chart of this currency pair in trading here today, we move to a new low going back to the month of September. That low tested the 38.2 at 146.30, and we've seen it bounce to the upside. We are still below the 100-day moving average. That's the blue line in this chart. That comes in at 147.23. We're going to need to get above that level, and as you can see, the high price today did fall short of that 100-day moving average. So we are sort of ping-ponging in between the 38.2% retracement, give or take, and the 100-day moving average on the top side, 146.30, 147.23, about 97 pips, or 93 pips, I should say, from the low to the high. And we'll see if the market can break out of that range. We are currently trading right in the middle of that trading range. Let's take a closer look at the hourly chart, see if we see any clues off of that. And nothing in particular here. We know the 100-day moving average up here is a resistance. They have a level here. I'm not sure where that comes from, to be honest with you, but the high price in trading here today also stalled near the low price going back to this day right here, which led to a sharp rise to the upside. So these sort of things stand out. and we can see that in trading over the last few days, we have seen that level try to hold resistance through here, moved above it, and then held support here. Fell below it and trading here today, moved below it, and now try and find a resistance against it right here. So this is going to be a key area, also joined by the 100-day moving average and now the falling 100-hour moving average. So sellers are more in control below this area right through here. We'll see if they can keep that control going forward and trading here today. As mentioned, we are trading in between the support down below and the resistance up above near this swing area and also the 100-day moving average. So finally, let's take a look at the sterling versus US dollar. And like the other currency pairs, we'll start on the daily chart. And the 50% or this swing area, let's call this swing area right through here between the 125.88 and 126.79. I know it's wide, but it is what it is. Was home to a number of different swing lows and swing highs going back in time through here, and probably even before this period here, going back in time through there. But what we do see more recently is how there are a number of different swing highs and lows through this area. In trading last week, the price did extend above that area, tested the 61.8, had a chance on to move above that level, couldn't do it, and then rotated back down to near support near the 50% and low of the swing area right through here at 125.88, and found support buyers not only on Friday or on Thursday but Friday. In trading here today, we are more testing the 61.8% retracement at 127.19. Stay below that level keeps sellers in play, and as you can see, we've moved back into the swing area here below the 126.80-ish type area. Taking a look at the hourly chart, see if there's any clues off of that chart. We are trading above and below the 100-hour moving average here. As you can see, the high price in trading in the Asian Pacific session stalled against the highs from last week, so we keep on seeing sellers lean against that. We are back below the 100-hour moving average. That's a blue line in this chart, which tilts the bias more to the downside, but as you can see, we traded above and below it in trading here today, so the market is not necessarily in love with the level, but it's still a negative bias for me from a technical perspective to be below that level. On the downside, we would have the 200-hour moving average that we need to get to and through, and that moving average has not been tested until going back to November 13th and 14th back here. So we've been above that 200-hour moving average for quite some time. We need to get below that level to increase the bearish bias at 126.18. So there you have it, a kickstart to your Forex trading by taking a look at 3 of the major currency pairs. I hope they helped you. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.